Welcome to an additional update. Today it's CPI day, which means that there is lots of the analysis, lots of data, lots of things happening in the markets. But in the end, the price moves to the right. And today we're going to focus on what's happening in the markets and what the data actually delivers us on CPI and what we can expect from that in this short update. But before we continue, make sure to hit the like button, subscribe to this YouTube channel as well. We're providing here with you with content on the markets almost on a daily basis, even though the markets are not too much fun for altcoins yet, which we'll also be updating in a few days. Also, make sure to check out our crypto course, the final day of the 5% discount to make you kickstarted in the crypto markets. It is you can find it in the description beneath. It is the code FINAL5, which you can use on our website, and then you get instant lifetime access to 8+ hours of content. Now, when we're looking at the markets, we can definitely arguably see that there is a case of, well, let's say stability for Bitcoin, as the markets are not really moving around at all. What did we get today? We did get the CPI data. CPI data definitely shows you information that you generally want to see in order for the FOMC to make a decision. And the FOMC is a government, or not actually a government, but they detect or they confirm the policy in terms of hiking interest rates. So we are expecting a few more rate hikes to take place. You don't generally want to see that, because if we are continuing to have rate hikes, debt will be more expensive, and through that it's going to be most likely not the environment that crypto will do well, through which if the CPI data comes out, you want it to be better than expected, so lower than what the actual projections are. 4 important data points. First one is core CPI, which month to month and year to year. And you've got CPI, which is the normal regular one that you are having on a year to year data point and a month to month data point. What we have is that last month the data dropped to 4%, and for this month we had a projection of 3.1, which came out as 3.0. Additionally, because of the fact that it came out lower than expected, the month-to-month data came also out better than expected, with 0.2 instead of 0.3. So if we're looking at the year-to-year data for CPI, we are getting back to the levels that we were looking at in April of 2021. So especially if you're looking forward with the 6 months data, we might even get into a phase where CPI drops into negative land. So we're getting towards the area. The only concern that we have is that core CPI is not yet getting there. Although we are seeing a pretty heavy cliff drop in this month. As also the core CPI has been dropping towards month to month has been dropping to 0.2%, and the core CPI year to year has been dropping by 0.5%, which is the heaviest drop that we have anticipating since we started to go through a rally on the CPI, core CPI. So in terms of projection, that is really positive for the markets. Especially that we've had positive numbers on PCE too, and tomorrow we're going to get PPI, which most likely turns to be negative, which means that the arguments for the Fed to continue with the rate hikes is going to slow down, as the arguments of inflation dropping are started here, and especially in the coming few months we most likely are going to see it fall down even more, and maybe we're going to see regular CPI drop into a case where we're going to have a negative number. Now, as a response, we've seen gold go up, silver go up, bonds go down, dollar go down, indices go up, and Bitcoin not. So why is Bitcoin not going up at this point? It is because they came out of timing, 30 minutes or 1 hour after the case of the CPI data, a news item came out, unapproved yet, which is that seized Silk Road Bitcoin has been moved, 9,000 pieces, which have been moved by the US government. Nothing approved yet, but that's exactly the fact that we are seeing a sweep of the highs consolidating here, and not yet the strength that we have been seeing on the indices. So when we are moving towards gold, gold is breaking out heavily. It is back to 1960. It is starting to turn up again, which means that the correlation between Bitcoin and gold has been substantial, as we know. So if there wasn't this news, most likely Bitcoin will follow suit, and the odds of breaking above 31.5k have been increasing, as the overall arguments for weak macroeconomic events or for a weak period for Bitcoin price action has diminished away. So it's just a matter of time before we start to make the breakout to the upside, whether or not we're going to have a correction. If we are going to break to the upside, most likely Bitcoin will go first, and then the altcoins will follow suit, and it's the pre-halving run, or the first one, that will just continue towards 38 to 42k, then correct, have consolidation, altcoins fly away, another run, and that's it. So gold is breaking out at this point, which is tremendous. We also see a case where silver is breaking out massively at this stage. We are up approximately $1 on silver, which is good, which also means that other ones like platinum as a commodity is breaking out here too. If we go towards the indices, we can see that the Nasdaq has been printing a new high, especially if we're going to get a case where we're going to have continuation, which means that PPI becomes in worse, comes in better, and employment comes in worse. We probably are going to have a continuation of the weakness on the dollar. We can have continuation on the strength of Bitcoin and gold as Bitcoin consolidates or moves alongside gold. So still we are waiting for the data of Silk Road to be approved, but I think it's just a liquidity crunch that we've just been witnessing, and slowly we'll go back up grinding again. Going towards the dollar, we see that we are printing into a new lows. We are actually going to take out those lows, and the momentum and the trend is downwards, which means that this trend is going to continue falling down at this point, especially since we are clearly going into a stage where the yields are going to fall as well, and where the FOMC is not going to continue the policy, which means that we're also most likely going to get weaker economic data, through which the arguments for the policy to be stopped have been increasing, through which the odds of having money printing starts to increase too, so people start to fly into safe havens. What do we see even more here? We can't do much of TA on the bond markets, but we do see a massive bearish divergence, which we also have been seeing here in 2018 to 2019, which was the period where Bitcoin started to bottom out and then had the huge bull market, as we all know, right? We started to have the bull until here. That is most likely the same case here. Massive bearish divergence, which implies that we are on the edge of having that bull market. If we are looking at the 1 year yields, that one is even printing a more beautiful bearish divergence here too, and the 10 years are crashing from a resistance point. Which means that right now, if we're going back towards Bitcoin, it is looking quite good as we flipped above the 200-week MA as well. What are we looking at in terms of price action? We can still see that we're chopping around. We can see that we are having a range-bound construction through which 31k is the critical one. If that breaks and flips, we most likely are granting ourselves continuation towards the new highs and continuation of an expansion above 32.5k, and even close this entire gap that we have been witnessing here, most likely running towards 38.5. So if we're going to have a correction, you clearly don't want to see Bitcoin drop beneath 30.2 to 30k. So this is your optimal entry zone. If that is lost, you're looking at 28.5 to 29k. The aggressive one didn't entirely fill here, but I think that we're definitely keen on getting the momentum to the upside. Back tomorrow with a fresh new update. Make sure to subscribe. Ciao.